Hey there! Today we're going to break down three of the most important and, let's be honest, most confusing words in business: revenue, income, and profit. Let's just dive right in.
It's easy to see why, right? They all sound like money coming into a company, and honestly, it's a mix-up that happens all the time. But getting this wrong, it can make you totally misread how well a business is actually doing.
And that's the thing. These aren't just three words for the same thing. Each one tells a completely different, totally vital part of a company's financial story. Once you get the difference, you'll understand how basically any business on the planet works.
So, we're going to start at the very top, with revenue. You'll often hear this called the top line on a financial statement. Why? Well, because it's literally the first number you see, and it shows all the business a company has brought in. It's really that straightforward. Revenue is all about one thing: sales. Just think of it as the total cash that comes in the door from customers before a single bill gets paid. It's a great way to see if people actually want what you're selling.
To make this crystal clear, let's just stick with one simple example through this whole thing. Let's imagine a company, and all they do is sell mobile phones. Pretty simple. And let's say they have a good month and sell 100 of them.
Okay, and each of those phones has a nice round price tag of 10,000 rupees. So now all we need is some simple math to figure out the revenue.
So you just multiply it out. 100 phones times 10,000 rupees each gives us a total revenue of 10 lakh rupees. Now that looks like a pretty big, impressive number, doesn't it? But, and this is key, we haven't even thought about expenses yet. This is just the raw sales number.
All right, let's build on that. Because selling stuff isn't always the only way a company makes money, right? And that little question brings us perfectly to our next term: income.
So if revenue is just about sales, think of income as a much wider bucket. It includes the revenue for sure, but it also includes all the other ways a company might be earning money. It gives you a much bigger picture.
So what kind of other stuff are we talking about? Well, of course, you start with the sales revenue we just figured out, but then you might add interest it earned from money sitting in a bank, or maybe some money it made from investments, basically any other cash it's generating.
So let's jump back to our phone company. We already know their sales revenue is 10 lakh rupees. But let's imagine they also earned an extra 50,000 rupees just in interest from their company bank account. You just add that interest right on top of the revenue. And there you have it, a total income of 10 lakh 50,000 rupees. See? Now we have a slightly bigger number that gives us a fuller picture of the company's total earnings.
Okay, so here's the million-dollar question, or I guess the 10 lakh rupee question. The company generated all this income, but is that the money they actually get to take home? Nope, not even close. And that brings us to what is arguably the most important number of all.
And that number is profit. You've probably heard it called the bottom line. It's the number that cuts through all the noise and tells you what a company truly made after every single bill has been paid.
And the formula to get there is beautifully simple. You start with that total income. So for us, that's 10 lakh 50,000 rupees. Then you subtract all the expenses, the cost of the phone parts, employee salaries, rent, marketing, the whole shebang. Let's say all of that adds up to 8 lakh 50,000. The result? A profit of 2 lakh rupees.
And that is what profit is. It's what's actually left in the bank account. It is, without a doubt, the best indicator of whether a business is actually healthy. I mean, think about it. A company can have massive revenues but still be losing money hand over fist if its costs are out of control. Profit is the true test.
All right, we've gone from the top line to the bottom line. Let's do a quick side-by-side recap just to make sure this all clicks into place. So let's just run through it one last time. Revenue was the total money from sales, 10 lakh. Income was the total earnings from all sources, which bumped it up to 10 lakh 50,000. And then the big one, profit. That was what was left after paying all the bills, a much more realistic 2 lakh rupees. See how each number tells a very different story?
And that's really the big takeaway. It doesn't matter if you're trying to invest or start your own business or just understand the news a little better. Getting the difference between revenue, income, and profit is ground zero. It is the absolute foundation of understanding how money works in the real world.
So I'll leave you with this little thought to chew on. You could say that revenue shows how fast a company is growing, but profit shows how healthy it is. If you were an investor, which one would you look at first? There's no single right answer, and it's a question that gets right to the very heart of business strategy. Thanks for tuning in.